Welcome to the ETF Market Insights, your regular webinar series that focuses on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights with the goal of helping you become an informed investor. Make sure to visit www.youtube.com/ETF Market Insights to watch previous episodes, and remember to hit subscribe so you receive a notification when we post new content. Thank you for joining us today. Let's get started.
Good afternoon. I'm Danielle Nezel with BMO ETFs. This is ETF Market Insights. As always, great to have everyone join us for our live stream of this session. We have a fantastic topic today. We're going to be talking about making an impact with your ETF investments. I learned a lot putting together this show today. We're going to talk about, yes, there's types of ETFs out there that are specifically ESG or sustainable investment ETFs, but also you might be making an impact if you hold a BMO ETF. We're going to talk through that, even if it's just kind of a straight up regular ETF, because we have Rosa Vandenbeet here from our responsible investment team at BMO GAM. She's going to talk through what we do behind the scenes for all the securities that we're holding and all the funds that we manage. And our friends from InvestorLine are going to talk us through a fantastic promotion. So we have Candice Chen to chat about that before we get started. But as always, this is our disclaimer slide, and just a reminder, we're not providing any advice today. Today is not providing any recommendations. We are here to provide you information on the markets and information on ETFs you can confidently manage your own portfolios. InvestorLine has the same story for you today, so they're not providing any advice or any recommendations. They're just here to chat through their promotion and give you guys some information on the markets as well. Now, I would love to introduce our session for next week. So we put together a special edition of ETF Market Insights. That's going to be streamed live, coming your way next Friday. You really don't want to miss it. I'm taking a break from the hosting chair. I'm going to pass it off to, we have a couple guest hosts. We have Sejal Patel from Strictly Money, and we have Adrian Starinari from Passive Income Investing. We have two topics we're going to cover. We're going to cover income investing using covered calls. We're also going to cover selecting an online broker account, understanding different register plans like TFSAs and RSPs, and getting started as an ETF investor. So please check us out. Go to etfmarketinsights.com. You'll find more information on those sessions coming your way next Friday. Our 1-minute ETF update today. So we're talking about sustainable investing, and I looked at the flows. This is our report from National Bank. So the flows going into ESG ETFs in March, and of course ESG is environmental, social, and governance ETFs. That's their focus. There was almost 400 million in assets that went into ESG ETFs in Canada in the month of March alone. And just in Q1 of 2022, we're looking at almost $1 billion in assets. So this area of investing is certainly growing. And we're really especially seeing this on the institutional level, where a lot of institutions are becoming more aware of their holdings and looking to products such as ESGY, which is the BMO MSCI USA ESG Leaders ETF, something like that, as opposed to an S&P 500 ETF, to try to get that sustainable overlay on their investment. So really interesting data I wanted to share with you. Now I'm going to pass it off to Candice. She's going to talk us through a really great promotional offer. Candice?
Hi, Danielle. Thank you for having me today. I am very happy to be here. And obviously, I always come bearing gifts because I want to give your viewers and your listeners today two very special promotions. One is for our self-directed platform. By using our Invest Smart promotional code today, you will get $4.95 trading for the first 90 days. So remember that, that's Invest Smart for our self-directed. And for our Advice Direct platform, I am offering up to $2,500 in cashback rewards. And make sure you use promotional code digital25 to get access to that $2,500. Awesome. Next slide, please. Also with BMO Investor Line, we offer a learning center for all of your viewers. So whether they're new investors or just want to maximize your learning knowledge and get some free demonstrations on how to make smart and informed decisions, we have the online course for your viewers. Just by going to www.bmo.com, www.bmo.com, and under investment, you will see our learning center to access all the videos. Proceed to the next slide. And of course, today, I'm not going to forget about our commission-free ETFs. And with that, helping your client do ETF trading, which helps setting up or transitioning their ETFs, rebalancing, risk management, tactical adjustment, or even regular contribution and diversification using our free ETF trading. Next slide, please. With our BMO Investor Line, we offer commission-free ETF tradings for over 80 ETFs. And it's not just for BMO ETFs. We offer 3 top providers that includes iShares and Vanguard, and of course, BMO ETFs. So for all of our clients out there that want to get into the ETF trading space, there's 5 asset class for them to choose from that are all part of our commission-free ETFs, including equities and 5 ETF. Great. Could we go back to the previous slide? Our 5 asset class, sorry, I just want to quickly go over the equities, our fixed income, and our multi-asset class, ESGs and thematics. Those are the 5 asset class you can choose from with 85 different ETFs that is part of our free commission ETFs. Next slide. And I want to lastly thank you everyone for letting me join today. I'm always willing to speak to anyone that has any more additional questions in regard to this. Feel free to connect with me at candice.chen@bmo.com. Don't forget the special promo code for all of our listeners today. Our self-directed code is InvestSmart for $4.95 trading. And our Advice Direct is Digital25 for up to $2,500 cash back. Thank you so much, Danielle. I'll hand that back to you.
Thanks, Candice. Those are some great codes there. Write those down at home to take advantage of that promotional offer. Thanks for talking us through that.
Thank you.
Now, I didn't mention off the top, but it was Earth Day this week, and that's one of the reasons why we wanted to get into this conversation. So, Rosa, now I'm going to pull you into the mix here, and could you just introduce to our audience today, what is responsible investment? What does this mean, and kind of what is it all about?
Yeah, of course, and thank you so much for having me. I'm really happy to be on and speaking with you today. So really simply put, responsible investment integrates environmental, social, and governance considerations into the investment decisions. And I think importantly, this is done to better manage risk and generate sustainable long-term returns. And I can go through a few examples of what that actually means in practice. So as you can see here on the slide, we have some examples of what constitutes, environmental, social, or governance issues. And I think everybody can probably relate to, what big of a risk climate change is, both for investments and for the society at large. And so when we look at integrating, climate change considerations into our investment process, it is really about looking at how sectors and the companies that we invest in are addressing these types of risks and how they're working towards a low carbon future. And this can either be, making sure they have less emissions going forward and plans towards 2050, or it can be, what type of opportunities do they offer through their services to be able to fight climate change. Another really great example I always use is beverage companies and water management. So for example, if you are a beverage company and you are operating in an area that has a lot of drought, and you have factories that make beverages and bottles that, you need to have access to water. And if you're operating in a high drought area, it's both not good for communities to take water from that area, but it's also not good for the longevity of your business because you might need to relocate. So these are all issues that can be both risks and opportunities. On the social side, of course, we look at labor standards, human rights, health and safety. So these can be things like, what is the employee experience at a company, and does the company have really good relationships with their employees or not? How do they operate in their communities? Is there maybe opposition by certain communities to a company operating in an area that can really have a negative impact on their ability to operate, and so it can have an impact on their on their performance and earnings statements. And then lastly, we have governance, which is really looking at how much do executives get paid and how do they get paid? Do they operate their business ethically? And corporate governance is about, what is the foundation of the company? Is it strong? Is there transparency, accountability, oversight at the top, etc.?
Thanks for talking us through that, Rosa. Now, I just wanted to also talk about, I know we looked at those numbers earlier about the assets and the AUM that are flowing into ESG products and responsible investment products. And there's a few reasons for that. There's a few tailwinds for this area of investing. And the first one is investors have become just less tolerant to corporate ESG incidents, and investors are aware of the impact of a negative incident on a company's value. And I can think of an example, a very extreme example, but back when Volkswagen was dealing with their emissions scandal, there's something that crosses governance lines, environmental lines, and this mismanagement of this ESG issue affected the equity of that company negatively. So investors are really kind of understanding this connection between positive ESG scores for companies and better shareholder value looking out long term. And then there's a greater understanding of that potential financial benefit, kind of thinking again back to that Volkswagen example where those risk-adjusted returns might look a bit better looking out because these companies are managing these ESG risks better than others. So another kind of reason why investors are looking towards responsible investment options for their portfolios. Investors also are thinking about demonstrating a willingness to act, and we're seeing this more and more, especially amongst a younger generation of investors that are coming to market, just being more aware of where they're investing, where their money is going, and wanting to kind of have some action and direct their investments towards companies that they believe in, that they think are trying to make an impact, trying to manage those ESG characteristics. And then lastly, we're seeing improved ESG ratings to measure these companies on an ESG scale. So ESG is a bit qualitative, but now we're seeing the quantitative side. We're seeing more companies invest in huge research departments to produce ESG rankings, ESG scores for companies. So we're getting way more data on these companies to understand just how how well they're doing, or maybe how behind they're doing in terms of different responsible investment or sustainable investment practices. So just a few things to highlight there to kind of showcase why assets are really starting to turn to and look to these types of products. Now, Rosa, at BMO, we have a responsible investment approach that we put towards all our ETFs and actively managed funds as well. Can you just talk us through this approach?
Of course, yes. And I think that's really important to mention that this is a responsible investment approach that's firm-wide for us. So regardless of whether you're invested in an ESG ETF or a sustainable fund or just a regular ETF or regular fund, this applies to all of our investments. So our approach is divided into 4 pillars. The first is thought leadership, and that's really about how we educate the market on ESG issues, how we share insights, and how we research, of course, also what type of ESG issues are emerging, what we should pay attention to, and then sharing sort of the actionable insights that we gain from that research with the broader market. That can be investors or our peers, or just anybody who is interested in reading. And then we have our stewardship approach, and that's something that I am responsible for at BMO GAM. And that really is about our interactions with the companies that we invest in order to create positive change on ESG matters. So that can be through dialoguing with companies one-on-one, or it can be through proxy voting. So if we, as a shareholder, you have the right to vote annually at the annual shareholder meetings of companies on various items. But we also engage with policymakers and governments to make sure that we can advance certain ESG issues across entire sectors or an entire market like Canada. Then our third pillar is ESG integration, and that is really integrating, those data points that Danielle was just talking about into the investment processes. So we actively work with our portfolio managers to give them better data on ESG, advise on things like what should be in a sustainable or ESG branded funds, but also where do we see certain ESG risks even in our regular funds. And then lastly, offering sustainable products and solutions, and that is related to all the branded funds that we have, ESG or sustainable or responsible funds. And then I would say there are 2 key themes that guide our work across all of these areas, and that is climate action and social equality. And we've chosen these 2 themes because they are really 2 key themes that our generation is grappling with, or multiple generations, that have really long-term implications for our way of life, but also could really affect, the stability of the financial markets over the long term. So through climate action, we look at how can we accelerate decarbonization at the companies that we invest in, but also across all of our own portfolios. How can we advance clean energy technologies? How can companies build resiliency for climate change risks? That can be anything from improving buildings to having safety measures, and then protecting our natural capital, which is really making sure that we preserve our forests and biodiversity in order to be able to fight climate change. And then lastly, advancing circular supply chains. So that is about thinking from the moment that a product is envisioned, making sure it's sustainable all the way through, and we don't have a lot of waste at the end of a product life cycle. And then for social equality, I think this, climate action, a lot of investors are now collaborating more on this topic, but I think social equality has really been emerging as a key issue, especially since COVID-19. And growing inequality can really affect sort of the stability, again, of financial systems, the growth of the economy, the health and mental health of people, and even affect democracies. So we focus on fair wages, making sure that people have equitable access to certain products and services and opportunities. We focus on diversity and inclusion, both at the workforce, but also, at how companies treat their customers. And then we look at human rights and Indigenous rights, and I think that's particularly important here in Canada. How can we contribute to Indigenous reconciliation to have a secure future for all Canadians?
Thanks, Rosa. And I just want to go back and highlight, you made so many good points there, but highlight your points at the beginning on stewardship, because I think this is something a lot of investors, especially, ETF investors, miss, is that their ETF provider is behind the scenes, actually in charge of those proxy votes and making those votes on that investor's behalf. So to have a provider that is paying a lot of attention to this, that is, doing what they can, has a team behind it to make those proxy votes very informed, and then also taking that a step further by engaging with these companies on a regular basis to, have a dialogue with them to get them thinking about ESG considerations more progressively. I think that is a very, very powerful thing that investors aren't totally aware of. But that's something we do for sure at BMO that we're proud of. But of course, other ETF providers have different approaches. So always just kind of research to see what other people are doing behind the scenes. So Rosa, let's dive a little deeper here on stewardship and company engagement. Can you just talk us through, what does this look like for your team, and how does this work in terms of your engagements with these companies?
Yeah, of course. Thank you, Danielle. Yeah, so this is really my daily bread and butter, so I'm always very happy to speak about it. And maybe to give a little bit of insight into the different things that constitute, good company engagement. As Danielle mentioned, it is those one-on-one dialogues that we have with companies to encourage positive change. It is making sure we proxy vote at every single shareholder meeting. And it is public policy advocacy, so encouraging regulators and standard setters to advance ESG issues across markets or sectors. And for our team, we focus mostly on the North American market, so we're responsible for working with our Canadian investee companies and some in the US. We also have a good partnership with another organization that does this for us in markets that are harder to reach for us, like emerging markets in Asia, but also in Europe, and they have really good connections there. And we also oversee that partnership. And so at a day-to-day basis, we're currently in proxy season, and that is basically the sort of 3 to 4 months a year where all the companies that are publicly listed in North America typically have their annual shareholder meetings. And so that means we do a lot of voting. So we assess each meeting, look at the board of directors and whether we think that they provide adequate oversight over ESG issues, whether the board of directors is diverse, both from a gender perspective and racial perspective, as well as whether they have the appropriate backgrounds and are independent. And so, in that way we look at voting for or against each individual director. then we get to choose if we agree, for example, with the executive compensation that has been issued in the prior year, and we can vote for or against that. So it's been a quite busy 3 months. It's like that every single year, but it's always quite exciting. So here you can see some statistics as well of how we voted last year globally, and how we voted against management by issue. And I think this is important because seeing how many votes against managements were issued by an asset manager gives a bit of an indication of how active they might be on things like stewardship and proxy voting. And if you agree or disagree with managements, or if you disagree with management, it is kind of an indication of you trying to encourage change at the company, rather than maybe just agreeing with everything that they put forward. So we issued over 15,000 votes against management last year. Most of that was against certain directors that were on the board. And then secondly, it was because we were not satisfied with either the compensation that the CEO received, it could have been too much, or it was just not tied to certain performance metrics. And then there are shareholder proposals that we get to vote on. If you are an investor or shareholder in a company, you have the right to put an item on the agenda of the annual shareholder meeting. And a lot of those are on ESG issues. And so we get to vote on those too. We typically support those types of proposals if we think they are reasonable and are on issues that we care about, like climate action and social equality.
Thanks, Rosa. Now, let's just take that maybe even a little step further. So you're doing proxy voting to help with push an impact or make a change. What about the engagements that you're making with these companies on a regular basis? How does that look, and how does that drive change?
Yeah, it's a great question. The two are pretty intertwined, but also separate. So when we have dialogues with companies, it's either because we noticed there is an ESG risk that they might not be addressing in a way that we want them to, or it could be that we're talking to a company that's actually already leading in the space, but we want them to do even better so that they can set a better example for their peer companies and sort of pull the entire sector along with them. We look at both ESG risks and opportunities, and then of course, like I mentioned, we have sort of systematic engagements on climate action and social equality as well. Last year, our main engagements were on climate action. I think that, of course, is the issue of our time. And that means that, when we sit down with a company, we have specific investor expectations that we would like them to meet. So that's setting emission reduction targets for the short term, so that would be 2030, and then also setting long-term reduction targets for 2050. We want the board to have really good oversight of how they are managing these types of climate risks, and we want them to be transparent to investors on what they're doing, the progress they're making, so that we can avoid any type of greenwashing. And so I think that's, the bulk of our conversations have been around climate and climate risks. But as you can see here, we also had a lot of conversations on social equality. And I think specifically the last 2 years, we've focused on workforce issues because of the pandemic, how companies are treating their employees, whether they have fair wages, sick leave and sick pay in place, how they are managing the diversity of their workforce? Are they looking at inclusion and making sure that employees are heard and feel feel at home at the company? And then we also look at what type of impact does our work have, because you can have a lot of conversations with these companies but not really know what impact you're actually having. So we address this by tracking milestones, and that is our way of counting sort of the progress a company has made on an issue that we've raised with them. So it's a 3-star system that we use. 1 star is, a small impact, and then 3 stars is a big impact. So for example, a company changes part of their strategy. Here you can see the milestones by issues that we reached last year. And it's not on the slide, but basically we achieved 275 milestones last year. So that just gives you an indication maybe of, the impacts, positive impacts that we've had. And then I think on the, oh, thanks. Yeah, that's great. So to give that a little bit more color with some actual company examples where we have reached milestones or positive outcomes last year. The first one is ExxonMobil. Now, this is not typically a company that finds itself in responsible investment funds. So this is really a company that we engaged, in our regular funds, so to speak. Exxon, as you know, is an oil and gas company and has historically not been really responsive to shareholder concerns on climate change. We are part of this big investor collaboration called Climate Action 100+, and that's basically global investors partnering together to engage with the largest emitters in the world to get them to reach net zero by 2050. So to really lower their emissions in line with the Paris Agreement. And with ExxonMobil, we had been trying to engage them for several years, but as I mentioned, they are notoriously difficult, and they were resisting also Climate Action 100+ engagement. So the way that this ties back to our voting strategy is that we can use our vote as a sort of escalation mechanism if engagement with a company is not working. So that actually prompted us in the last 2 years to vote against directors on the board to indicate that we were very dissatisfied. We also co-filed a shareholder proposal at ExxonMobil. So at the 2021 shareholder meeting, there was actually an agenda item that we put on the agenda, and that was on climate-related lobbying. Investors voted overwhelmingly in favor of that agenda item, and I think it was over 60 or 70% support. So that means that ExxonMobil then had to do what we asked in the proposal and give us more transparency about how they're lobbying on climate change issues behind the scenes, because they had historically also been known to really lobby the government against putting in place climate-related regulations. So that is one example on climate change. Then the other one, a name that probably everybody knows here in Canada, is Loblaw. And Loblaw, we have been engaging for many years on many issues, and not because it is necessarily a laggard in all areas. In some areas, we see them as quite a leader, although they can improve on some other issues. But what we were particularly pleased with was that they were one of the first Canadian companies to set a target to enhance board diversity of visible minorities. And that is something we have been asking Canadian companies to do for the last 2 years. And they were one of the first companies that actually implemented this in a way that we were really happy with. And we actually had a conversation with them again a few weeks ago where they showed us some actual results, and they have now put forward a visible minority director on the board. So they're good on their way to making their targets. So that is another milestone example. And then the last I'll mention is Suncor Energy. Suncor, of course, is a Canadian oil and gas company. And the Climate Action 100 Plus investor group that I was mentioning earlier is also engaging Suncor Energy, and BMO GAM is actually one of the investor leads for this conversation. So that means that we drive the conversation along with a small group of other investors, and then are supported by other investors in that process. And we have been engaging Suncor for a very long time on climate change. They have always been very responsive to our engagement. We've always been able to speak to the board and to management, but they weren't progressing really on setting a net zero target by 2050. And in 2021, they actually did finally release their target and a really comprehensive roadmap on how they plan to get there. So that is another milestone that we worked collaboratively with other investors towards, and we'll be, of course, continuing to engage Suncor on how they're going to meet their climate targets going forward.
Thanks for walking us through that, Rosa. And I just love about these examples, and something that I learned along the way this week. If I'm just holding a regular Canadian equity, for example, BMO ETF such as ZCN, I am a small shareholder in Loblaw. I'm a small shareholder in Suncor. So just knowing that you and your team are behind the scenes casting votes, on my behalf and all the holders on our behalves, and really digging deep on these issues and understanding each of these companies, I think that it's a really, really great benefit to these ETFs. So thank you for your team for all your hard work on that. Now, today's conversation really was about thinking about stewardship and engagement amongst all types of products, not just a sustainable investment product or an ESG focused product. But I just wanted to take some time before we close out our conversation just to talk about, if you are thinking about taking that step further and you are thinking about adding an ETF to your portfolio that has a sustainable investment focus or an ESG focused, there are 3 types of ETFs out there that you can look for and do some research on. So that first type is just called a broad market ESG ETF. And what this really does is it provides access to all the sectors of a specific region. So usually they're regionally focused, a Canadian ESG ETF or a US ESG ETF. And they'll match the sector exposures fairly closely to just the straight up broad market. So what this does, it eliminates what we call is tracking error. So a great example would be in the Canadian market. If you'd like a broad market ESG ETF, you're still going to hold energy companies, but you're going to be holding the highest scoring energy companies on an ESG scale versus other energy companies. You won't be holding those ESG laggards. So that's what we call the broad market approach. Now, the ESG theme approach, I think investors are a little more familiar with. This is when you get access to a specific theme. So perhaps a women in leadership theme, where you're looking at companies that have targets for women governance, women on boards, women CEOs, something like that. Or there could be a climate theme such as clean energy or ex-fossil fuels. So we call these ESG theme ETFs, and they definitely look a lot different than broad market exposures, but they're laser focused on that specific theme. And then lastly, there's asset allocation ETFs that hold ESG ETFs within them. So we talk a lot about asset allocation ETFs. These are ETFs that hold both equities and fixed income, and you can find an ESG version of this type of ETF as well. So just wanted to talk through that. We got a few questions this week, so I'd like to just jump right into them. What is relative performance of active versus passive ETFs, and when do each type shine? Well, I will say, just to differentiate the difference between active and passive. So an active strategy, this is where you're typically trying to beat a benchmark. So we call this alpha, or providing alpha. And the passive strategy generally is the benchmark itself. So for example, an S&P 500 ETF, that's the benchmark for the US equities is the S&P 500. So if you're investing in something like that, you're investing in the benchmark or the entire market. Where an active manager who's managing US equities will try to beat the returns of the S&P 500. So that's kind of the difference there. Generally, active strategies are more expensive or carry a higher MER than passive strategies because you're kind of paying for that expertise of that active manager. You're paying for that potential and getting that alpha return. So something to look out for. But that is basically the main difference between the two. Inflation adjusted bonds and TIPS ETFs. How do we evaluate these? Well, I pulled this chart to kind of explain and answer, and actually this is just, if you go to etfmarketinsights.com, under our tools, you can access this compare tool. It's free to use if you'd like to compare different ETFs listed in Canada. So a TIPS ETF is a Treasury inflation protected security, and a real return bond, these are Canadian government bonds that are inflation protected. So I will just highlight the difference between the two. Real return are Canadian, TIPS are US issued, and real return bonds from Canada generally have a longer duration. So just something to look out for. So what I'm comparing here is a short-term US TIPS index ETF and the broad bond market in Canada. We call this the universe, the bond universe in Canada. So that's ZAG, that's the orange line. So this is a 1-year return. So you can see that the inflation adjusted or the TIPS product is doing what it should in this environment. We know bonds have had their worst quarter in over a decade, and that's of course because rates are rising, bond prices are falling. But with that inflation hedge and then looking at that shorter duration with something like a short-term TIPS ETF is hedging away some of that rising rate risk and that inflation risk. So just if you'd like to do this compare yourself, just check out our tool at etfmarketinsights.com. Where do REITs and preferred share ETFs fit into a portfolio, and what part of the economic cycle benefits these asset classes most? Well, REITs generally, we say, because you're exposed to real assets in terms of real estate. So these can do better in an inflationary environment. And then in terms of preferred share ETFs, do your research, understand what kind of preferred share you're investing in. The largest preferred share ETF in Canada by assets is ZPR, so BMOs preferred share ETF. This is a rate reset preferred share ETF, and generally in a rising rate environment, a rate reset preferred share will outperform other preferred shares. But do some research there because all preferred share ETFs are built differently. We had a great conversation on this a couple weeks ago. That's posted on our YouTube channel if you'd like to get a deeper dive on preferred share ETFs. Do the BMO Innovation ETFs include holdings in blockchains or crypto? No, they don't hold physical crypto. None of them do. ZFIN, which is the fintech ETF, is exposed a little bit to blockchain companies. Thanks so much for the questions. Please keep them coming in, and keep them coming in for all our expert panelists that are joining us next week. Remember, episode 1 next Friday, we're going to talk about cover calls. Episode 2, we're going to talk about getting started as an ETF investor. what to look for. This is our Spring into ETF Investing event. We're so excited to bring it to you. So we will see you then.
Thank you for watching the Market Insights webinar series. To stream any previous episode of the Market Insights webinar series, please visit www.youtube.com/ETF Market Insights. Remember to hit subscribe so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at www.etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or a recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.